All right, good evening, guys. Welcome back to another video. So I think today, this time around, we will be talking about one of the upcoming mergers of two Singapore REITs, mainly Mapletree Commercial Trust with Mapletree North Asia Commercial Trust. So of course, right now, I think we will go through basically what the merger is all about, and then at the end of the day, it will be up to the respective unit holders to take a vote whether the merger will commence or not. So right now, the table, I mean, the REIT managers have tabled and showed that they have the intention to merge it. So it's up to the retail unit holders to actually vote for the merger to proceed or to come to a halt lah. So I'll pass it to Chun Beng. Probably something that you do not really see in the Malaysia REIT scene, right? And when it comes to merger of two REITs.
Correct. I think merger is like a Singapore thing for me. I close to didn't hear of any merger happen in Malaysia before. I mean, throughout my very short period of time that's doing investing. So I think it's an interesting angle if you guys are from Malaysia. Basically, these two are one of the few popular REITs. And then, of course, what does the merger mean? And then what is of course, the benefit and also the risk of it. But of course, maybe Japan can help us to do a quick walkthrough about what is called Mapletree Commercial Trust. Of course, I think me personally went to Singapore before I went to this place. For me, Mapletree Commercial Trust is familiar in a way, but maybe you can continue on. The second one is definitely not familiar to me.
Yeah. So I think for those who have traveled to Singapore before, particularly if you have been to Sentosa Island before, chances are you will be going to Sentosa Island via the so-called cable car or via the so-called small train, right? So the train station is connecting Vivo City, the mall that you're looking right in this photo right now. It will be the connecting station to Sentosa Island. So if you do travel to Sentosa Island via the train, chances are you have actually been to Vivo City before, and it's not only that fact, but it's also a very big, one of the biggest malls in Singapore with a heavy footfall and a lot of shops as well. So of course, there's one of the only properties only. They also do have other best in class office buildings as well, like Mapletree Business City. So one of the key tenants of Mapletree Business City is actually Google. So you can count Google as one of the key tenants of this Mapletree Commercial Trust. So I think we move on to the next company or the next REIT. This one, I think a lot of us might not be familiar if you actually within Malaysia, but this is also one of the sister REIT of Mapletree Commercial Trust, just that their focus is mainly on investing in commercial properties located in north part of Asia. So particularly Hong Kong, China, Shanghai, Hong Kong, China, Korea, and Japan. Like their more well-known crown jewel properties is actually Festive Walk. This is a mall located in Hong Kong. So chances are, if you have been in Hong Kong before, you might have actually visited this mall as well, as it's also one of the bigger malls in Hong Kong that is operating as of today lah. So basically, the overall story revolves around Mapletree Commercial Trust, the one that we saw just now, buying or acquiring Mapletree North Asia Commercial Trust. So that is what is happening right off today. So we will go through this sharing, basically covering what are the so-called things that a Mapletree Commercial Trust holder can do, and what are things that a Mapletree North Asia Commercial Trust holder can do. So I think we'll skip through the next one and let Chun Beng start it off by being the interviewer, since he is unfamiliar with the overall merger activities going on.
Yeah, because when I came across these mergers, the first impression is it seems like it's a strategic merger that make the entire portfolio more diversified geographically, and of course, going through the PDF that shared by the company is all about what is the potential uptake lah. But I will be very, very interested to see from the risk perspective as well, from both angles lah. Because if you are from Singapore or you are investing in Singapore, you might be owning MCT, Mapletree Commercial Trust, or you might be an investor of Mapletree North Asia Commercial Trust. So the different angle, we also will bring everything together for you to take a look. But of course, this is an overview. The slide here is basically telling you what is actually happening and how all this merger is going to happen. But then I think now go into one of the key topics. If you are currently a unit trust holder of Maple North Asia Commercial Trust, what can you do? JuJuR, maybe you can take us through.
Right. So Mapletree North Asia Commercial Trust, if you are a shareholder or unit holder of this REIT, basically your REIT will get bought over by Mapletree Commercial Trust. So when we talk about bought over, of course you'll get reimbursed, right? Because you're holding the units or the shares of a company or a REIT. So someone wants to buy it from you, they want to take it over. Naturally, you'll get reimbursed, right? So there are three schemes or three choices Mapletree Commercial or North Asia Commercial Trust can choose. So basically, you can exchange your existing Mapletree North Asia Commercial Trust REITs units into Mapletree Commercial Trust units. So you're actually doing 100% consideration units of conversion, but the ratio would be for every one Mapletree North Asia Commercial Trust unit, you're actually going to convert it to just 0.5963 units. So that is the ratio. If you want to convert 100% of what you have right now into 100% of Mapletree Commercial Trust, so there is a ratio. The second one is a mixture of cash and scrip consideration. So basically 84% of what you have right now in Mapletree North Asia Commercial Trust will be converted into MCT units. The remaining 16% will be the cash component that amounts to 19 cents, right? Roughly 19 cents of Sing dollar, right? And the third option will be just taking cash entirely, 100% cash. And that means MCT will be buying over your MNEC shares or units at 1 Sing dollar and 19 cents, or 1 Sing dollar and 19 cents. So you have three options to choose from, right? And of course, how to choose and how to vote basically will depend on how you answer the questions. So basically, if you can answer these three questions, you roughly would know which option or which scheme options you'll be choosing. So the first one will be whether you are a believer of the synergy of the merger between MCT and MNEC, right? If you truly believe that two REITs coming together will make the enlarged entity better, then of course you want to be in the long run, you would actually convert 100% of your MNEC units into MCT units, right? And if you believe that the valuation on the conversion of the MNEC units to MCT, even though it's at a lower ratio, right? It's not a 1-to-1, right? But if you still believe the valuation is fair, it will still continue to opt for 100% scrip only consideration. If you do not think it is fair, then you are actually welcome to opt for scheme option 3, which is the fairest of them all, which is a consideration of 100% cash, or you can actually opt for option number 2, which is just a mixture of scrip and cash, right? So it really depends on how you answer the question, because valuation can be subjective, but if you have a firm answer and you think it's fair, naturally you opt for option number 1. And of course, you need to really believe in the long-term prospects of MPAC, which is the merged entity. So long if you do not think that the merged entity will generate, good returns in the future, then no point in converting your MNEC units into MCT units. Might as well just take the cash and leave your, leave the position and close your position and take cash. So that is the very straightforward consideration whether or what scheme option to choose if you are an MNEC holder as of today, right? I think straightforward. I think maybe we'll move towards the benefits for MCT holders should you actually vote for the merger with MNEC, right? So we talk about the benefits first, which I think the REIT managers has been emphasizing quite a lot. So the first one, very straightforward, is actually the accretiveness of the DPU and the NAV. So meaning to say that for every unit of MCT units you hold right now, after the merger with MNEC, your distribution per units will go up by 6.8%. Your NAV, net asset value per unit, will go up by 7.1%. So that is already a very strong indication that why they wanted to proceed, and they are using this to convince the retail unit holders to actually vote for the merger. Right. Of course, there are also other benefits. The other one, which I think is quite instrumental as well, is actually the higher debt funding capacity. So when REITs buy or invest into investment properties, they usually buy properties or invest in properties with the so-called they will use a mixture of debt and also capital from the unit holders. So when you have the debt room of REIT A and REIT B adding up together, you actually increase your debt headroom, and that actually allows the REIT to undergo more acquisitions in the future, right? Of course, that is one of the key, also one of the key reasons that why the REIT merger is very logical to proceed. But then again, what retail unit holders need to know is the risk that Mapletree Commercial Trust will actually take over also as well, which is the inherent risk of MNEC, right? Whatever risk or whatever downsides that MNEC has, now that when it's merged, so MCT holders will also need to accept the risk of MNEC. So one of the key risks is the Hong Kong exposure. So I think when the riots or when the so-called protests in Hong Kong actually broke out, you can see that Mapletree North Asia Commercial Trust, the REIT unit shares actually tanked down quite a bit. It actually hit a gap down. So, and ever since then, you can see that the price actually trend lower. Just like after the merger news came out, only it began to really went up higher lah. So when you actually buy over MNEC, any future potential geopolitical issues happening in Hong Kong that can impact festive walk will also impact the merged entity. So I think the next one would be you can actually gauge how much of the percentage of the concentration or the exposure the Hong Kong segment will actually contribute. So it's going to be roughly around 26% based on asset under management, and also by 21% if you look at the net property income in perspective. So that is the good points and the risks that you need to take note of for MCT holders, and now to actually understand the proxy form and how to vote on the proxy form, because there's going to be 4 resolutions to vote for, right? So basically, here are the 4 resolutions. So the resolution 1 is pretty straightforward. Basically, if you really approve the merger of MCT and MNEC to proceed, you need to vote for or yes, right? If you don't agree with the merger, then you vote against, right? There are 2 columns in your proxy form. So the second resolution is if you actually want the merger to proceed, then if MNEC unit holders opt to receive their reimbursement in the form of MCT units, right, as we talked about just now, then as an MCT unit holder, you need to allow the REIT managers to issue out more units, because you are actually going to help MNEC unit holders transform or change over to become MCT holders. So you have to actually allow that to happen as well. So that is the importance of resolution 2, even though resolution 1 is the main voting title or the main objective. Coming into resolution 3 is whitewash resolution. This is also very important. We'll talk about more later. And also, last but not least, resolution 4, which is potential change in the management fee structure. So pertaining resolution 3, we are actually going to give a waiver to the REIT managers to not extend a mandatory general offer. So you need to know when the merger actually came out, it was actually a preferential offering. Meaning to say that for MCT to buy over MNEC, MCT need to raise capital, right? Money don't drop from the sky. There must be money coming in. And the first initial impression or idea was to actually raise the capital from the unit holders, right? They will extend towards a rights issue or preferential offering. Then we actually pump in the money, get more units, and then once there's enough money, then the acquisition will take place. But ever since the news came out, and coupled with all the so-called geopolitical or the so-called big news titles that we have been experiencing, stock prices have been down to date. So the current market price of MCT is actually lower, significantly lower than the preferential offering price that the REIT manager set. So it would be just common sense for retail unit holders to buy MCT units off the market rather than subscribing to the preferential offering. So the merger still needs to go on, still needs money to actually continue for the merger to happen. So what would happen is that the sponsors would actually fork out the money. But by forking out the money and in exchange for more units, the number of units that the REIT managers will have on hand or the sponsor have on hand will actually be increased up to close to 60%. And we have to actually vote for the waiver of the resolution, whitewash resolution, which is we give the so-called approval to the sponsors to not actually undergo a general takeover. So if a general takeover would actually happen, it means that the list will be delisted, right? It will be privatized, it will be taken out and taken down from the Singapore Stock Exchange, which is what we as unit holders do not want, and which is also what the sponsors do not want. So we have to actually vote for if we want to proceed with the merger and let the sponsors actually fork out the money and let their unit holdings hit close to 60% without having a general takeover to happen. Right. So that is also very important. So I think we can move on to the fourth resolution, which is if the merger actually took place, there's a potential opportunity to revise the management fee structure. So previously or currently, MCT's fee structure is basically based on a base fee of 0.25% per annum based on the value of the deposited property. There's also a performance fee, so counts as a bonus. If the REIT managers manage to increase the net property income, they will actually take 4% of it as their performance fee. So on surface, it seems like, okay, quite fair, but wait till you look at what MNAC has been practicing so far. So basically, for MNAC, they actually charge 10% per annum of distributable income. So meaning to say that if the REIT managed to earn enough income and then let's say 100% of it, they will only take 10% of the distributor income. So the REIT has to achieve certain distributor income capacity or capability for the REIT manager to earn their fee. And then any performance fee or bonus is based on the potential of the REIT to grow their distribution per unit. So if the merger does go through, MCT actually allows unit holders to vote for a fee structure change, which is based on a 10% distributor income plus a 25% year-on-year growth in the DPU. So on a DPU basis, it would actually be much fairer since for unit holders, we risk or take the risk of a dilution whenever we invest into a REIT. So now that we know that the performance fee of the revised fee can actually be tagged along with our interest, definitely we want to vote for also for this resolution number 4.
So I think it's kind of complicated if you as layman try to understand all these things, because when I go through this, there are 4 resolutions. Then in my mind, I can 2 pass, 2 fail, 3 pass, 1 fail, and what will happen? And no worries, I think Japan can get us through. The mixture of different combination of the outcome actually will lead to what?
Yeah. So I think actually the main big picture is whether the merger will proceed or not, right? So there are 4 outcomes, but after I read it, I only can come to a conclusion there are only going to be 3 outcomes. So outcome A is basically if MCT unit holders vote in favor for resolution 1, 2, 3, 4, so the merger will proceed straightforward, because for resolution to pass, 2 and 3 needs to pass. And after resolution 1 pass, only 4 can pass. So you need to know the prerequisite of each resolution. So in the event of all 1, 2, 3, 4 resolutions are passed, the merger proceeds and the fee structure, the trustees can be adopted. I think that would be a win-win situation, in my opinion. But there's also a potential scenario where there's an outcome B, the merger proceeds, 1, 2, 3 resolution get voted for, but resolution 4 gets voted against. So the merger still proceeds, but the old MCT fee structure remains as it is, right? Then you come over to the scenario where the merger does not proceed. may need to say that this is due to the fact that MCT unit holders vote against for resolution 1, 2, 3, and 4. So straightforward, no merger and no change to the fee structure. And then there might be also some MCT holders thinking that, wow, I do not want the merger to proceed, so I just vote against for 1, 2, 3. But I think that resolution 4 is actually quite beneficial to me, since that the overall fee structure is going to be gauged and judged based on the DPU growth on a year-on-year basis. So I vote yes also for resolution number 4. So right here, they stated very clearly the MCT trustee amendments will not be adopted, and MCT's existing fee structure will continue to apply even if resolution number 4 gets voted for and it crossed the threshold. So you need to understand the prerequisite for each resolution to come into effect. So if you really want the merger to proceed and you think that the fee structure is beneficial to the entire unit holders, then you just need to vote yes for all 4 resolutions. If you do not think the merger is actually going to be beneficial, then by all means just vote against. Any other mixture will just make the vote irrelevant and will not be valid. So just bear in mind the consequences and also the prerequisites before you vote.
Yep.
So I think once you actually get a whole and understanding on how the importance, the good and the bad side of merging with MNEC, then you need to understand the deadlines. So basically, nothing is forever. If you are already sure of what you want to vote for, here are the dates that you actually need to be in mind of. So basically, the last date of the pre-registration of the EGM will be on the Friday, which is 20th of May. So I think right now, as of time, this video is being filmed, we have around 1 week plus to do everything, right? Register and also lodge the proxy Form A as well. And then after that, we'll just actually attend or wait for the EGM results to be announced, and then whether the merger will go through or will not go through.
Okay, I think thanks Jupan for sharing a quick summary from both angles, be it you are from MNET or you are a unit holder of MCTs. What is the thing that you need to do, and then what is the potential benefit and also the risk. So maybe Jupan can do a quick summary to wrap up this video.
Sure. So I think it's just more than just relying or wanting MCT to remain 100% pure play Singapore REIT, or whether you want MCT or MPEC, the merged entity, to continue to grow. But you have to really look at things 10 to 20 years down the road as well. Because at the end of the day, of course, most Singaporeans would be actually proud to hold on MCT, because Singapore generally is a much safer and stable country in terms of geopolitical aspects and also property investing. But I think the larger picture or larger questions that a lot of people need to answer is that due to the land scarcity of Singapore, there will only be a certain ceiling or a bottleneck that will hit MCT when it continues to grow, right? So when that happens, what do you actually want from MCT? You can actually be very complacent and say that I will still continue to receive distributions from MCT because it's still going to be operating their rental of their investment properties. But on a larger picture, if your REIT cannot continue to grow and you cannot remunerate your REIT managers and competitor REIT managers come hunting around, you would actually be in the risk of losing your world-class REIT managers to other REITs who are actually growing as well. So it's not just being proud of 100% pure play Singapore REIT, but also to be thinking of any growth prospect for the REIT managers, the REIT, and also the unit holders to actually grow together in the next 10, 15, or even 20 years down the road. Yeah.
Yep. So I think this wrap up the video. Feel free to put in the comment if you think otherwise, or any feedbacks. We will try our best to actually answer accordingly. If you like this video and hope us to actually cover more stock from Singapore, feel free to also put in the suggestion, and we'll try to put it inside the list, and then to cover it in coming weeks or coming months.
Yeah. So if you really think it's beneficial, to also share it in your social media and also to your friends and relatives. And we will see you in the next video. Take care. Bye bye.